You ever see a company announce its IPO and just get hit with this wall of numbers and jargon? Yeah, you're not alone. In the next 5 minutes, we're going to break it all down for you so you can understand the real story behind all those figures. So, does this look familiar? That sea of numbers, crores, and weird terms? It can be a lot, right? But stick with me, because I promise, by the end of this, you'll be reading these things like a total pro.
So, let's treat this kind of like an anatomy lesson, okay? Before we start dissecting all the little parts, we need to look at the whole body. What is the overall goal here?
So at its absolute core, what is an IPO? Well, it's basically a company's big debut on the public stage. It's that moment they swing the doors open and sell shares to folks like you and me for the very first time. And the main reason they do it? To raise a whole lot of money. Okay, so when you see a giant number like this at the top of an announcement, in our case, 451 crore rupees, that is the goal. It's the total amount of money the company is aiming to raise from the public. That's it. That's the big picture.
All right, dissection time. Let's start with the two most basic numbers you're always going to see: the total size of the offering and, of course, the price tag on each share.
So issue size, that's just a fancy term for that big fundraising number we just talked about. It's the grand total. And some of these can be absolutely massive. I mean, just to give you some perspective, when Zomato went public, its issue size was a whopping 9,375 crore rupees. Now, how do they actually price these shares? Well, they don't just pluck a number out of thin air. Instead, they give you a price band, basically a price range, with a floor on the low end and a cap on the high end. Investors then bid inside that range, and the final price is set based on how much demand there is. It's a really smart way to let the market itself kind of feel out the right price.
Let's look at a real-world example. Remember the huge LIC IPO? They set a price band between 902 and 949 rupees a share. And guess what? The demand was so high, it ended up pricing right at the very top, 949. That's the price band in action, right there. Okay, our anatomy lesson continues. Let's follow the money, which is kind of like the circulatory system of the IPO. We know they're raising a ton of cash, but the really crucial question is, who actually gets it? First up, you've got the fresh issue, and it's pretty much what it sounds like. The company literally creates brand new shares to sell. And here's the key part. Every single rupee from this goes straight into the company's pocket. They use it to grow, expand, maybe pay off some debt. For example, in Paytm's IPO, a huge 8,300 crores came from its fresh issue. But then there's the other side of the coin, the offer for sale, or OFS. With an OFS, 0 new shares are created. Instead, you have existing shareholders, we're talking founders, early investors, selling their own shares. This is their big payday. The money goes straight to them, not the company. A classic example was the Nika IPO, where a big chunk of it was an OFS for the early investors.
So let's be super clear about this, because it's maybe the most important part. A fresh issue? That's new money for the company's future. An offer for sale? That's money for the early birds who are cashing out. Just knowing that split tells you so much about why they're even doing the IPO in the first place. Okay, let's bring it back to our example. Out of that 451 crores, only 179 crore is a fresh issue for the company. The bigger chunk, 275 crore, is an offer for sale. Right away, that tells you something interesting. More money is going into the pockets of existing shareholders than is going into the company itself. Okay, so we've covered all the official stuff, but let's be real. Around any big IPO, there's always this buzz, this unofficial chatter. So let's talk about a term you'll hear all the time, but you gotta be super careful with this one. All right, let's talk about the gray market premium, or GMP. The gray market is basically this unofficial, completely unregulated space where people start trading IPO shares before they even hit the stock market. The GMP is the extra premium people are willing to pay, and it's seen as a hint of how much demand there is. But I really have to hammer this home. This is all unofficial. It's pure speculation. And this is exactly why you have to be so careful. Sure, a positive GMP suggests there's strong demand, but it is not, and I'll say it again, not a reliable crystal ball for the listing price. It's just market gossip, really. And things can change on a dime. So, just so you understand the math, here's how it works in theory. If the GMP is, say, 10% and the top of the price band is 325 rupees, you just add that 10% on. That suggests a listing price around 357. But notice I'm saying suggests and around. It's all just a guess. And if you need proof that it's just a guess, here it is.
A tale of two IPOs. For the Paris Defense IPO, a sky-high GMP was followed by a spectacular listing gain. Awesome! But then you have the Paytm IPO. It had a positive GMP to start, but that completely evaporated, and it ended up being a listing day loss for investors. See? It's basically a coin toss. All right, our anatomy lesson is officially over. We've looked at the scale, the price, we've followed the money, and we even checked out the unofficial buzz. So let's put all the pieces back together and talk about what you really need to remember. So, when you look at an IPO announcement from now on, here are the 3 things to zero in on. 1. Check the issue size. How big is this whole thing? 2, and this is the big one, look at the split between the fresh issue and the OFS. Follow the money. And 3, treat the gray market premium for what it is. Interesting gossip, not a financial guarantee. So, the next time an IPO announcement pops up on your screen, you're not going to see a confusing mess of numbers. You'll actually be able to decode it. You can now read the label on the box. So the real question becomes, now that you know what you're looking at, how are you going to judge what's actually inside?